right, minute 35 till open. Yeah, I had to go pretty savage mode yesterday. I know that was a little difficult to follow, but I'm glad that people were able to follow it. We have not done that in a very, very long time, but we won't be aggressive today. Trying very hard to hold us within this chop zone here. Pivot point is starting to shift to 205. Buy is still up, going into open. 40 seconds. Market movers, which other server were you referring to? Because this one has always been open for the last like 6-7 years. All right, let's see how we open up. 205 exact. Trying. Remember, bias is up. Going into open. But it is a weak bias, in my opinion. Let the candles form a little bit. Let's get some data. I said data, the lady said data. Funny. NQ immediate break 217 will long. NQ longs entered. Bang, bang. Dude, I can't even type this out fast enough, damn it. I'm taking full exit here, 77. All out at 24 to 77. Looking for re-entry into longs. Taking entry here, 43. Lotto sizing. First term's it. And Q prop step out the rest. I told you guys it'll be a pretty volatile open, right? All right, we need to chill for a second here. We want to see that base continuing to hold at 205 and then watch for re-entry above 238. If you have big balls, you long it here. If you have big balls, be careful. Bang. Again, I am waiting. Let me now go to the second exercise, the global fragmentation, and this goes back to work I did I want to see 205 base, 238 for reentry, NQ longs 238. NQ first from zit, NQ second from zit. Out half. God damn, this is moving fast. God damn, this is moving fast. But hey, 100% win rate so far on this. Not bad. Not bad. Bang, bang, bang is all I'm going to say. NQ profit stop out the rest. I really want to re-enter this one more time, but I'm going to stop here. We're going to wait. We do have news coming out at 9:45. I want to see a base starting to form above that 238 level. So we shall wait. Well, obviously we need a base above 205 first.
that doesn't happen, then
sectors, then US
we gotta watch for
inflation
this
will come.
bias flip to the
That's what
downside at
factors.
the levels
And
mentioned
this
in
is just
pre-market,
the
24,153
sector of
area.
supply shock. Now you add fragmentation, you say, okay, now this term is already going to give me that I have sector demand and supply shock. Let me fragment the world.
You know what?
And what happens in that world to this term, you're also
We
going to
might
have
wait
this
for
part of the
news.
term, which is going to get extra cost coming to trade pairs. And we are going
Bias
to
is still
fragment
pointing
a
up.
little
Notice
bit.
how
And so
bias
this
tested the
look,
lows there
first
and
equation,
still
I
pointing up.
matched inflation very well. This is 2021 inflation in
I'm gonna enter
United
NQ
States,
longs,
and you can see what
215.
actually happened. And the dots are what
Lotto sizing.
Lotto, and it's pretty successful even before you fragment.
NQ up 10, take if you wish.
Matching what happened just with sector supply, sector demand shocks. We also have aggregate demand shocks in order to be able to match the extreme fiscal stimulus done, of course.
NQ up 15, stops move to break even. NQ first from zit.
This is totally exogenous. There are way more systematic papers doing this based on UN goals.
NQ trim at
Imagine there's United States,
255.
allies, rest of the world, China and Chinese allies, and the arrows is going to show you the trade deals between countries. If you go to this type of a counterfactual fragmentation, there are going to be serious employment effects.
Out
You know,
75%.
anywhere from
40
1 to 9%.
points.
But
Bang,
if you look at
bang,
US,
bang.
but even if you look at the US, your relatively closed economy compared to other countries, there are going to be some serious drop in it.
100% win rate over 5 trades. Bang.
It's going to be a pretty serious impact for the rest. My final exercise is going
I know I keep saying that I'm going to chill, but this volatility, the volume, it's insane. This is scalper's heaven. I mean, I would have long that 24,153 area, but it didn't tap into it. Said I wasn't going to be aggressive, but you kind of had to on this. You kind of had to.
The tariff uncertainty and tariff itself ends up being. Now here, of course, we are going to need sticky prices.
At the end of the day, we are scalpers. Jinx is like, bruh. Well, 5 minutes. And I believe you all should have hit your goals.
In our setup, it's not only that you are going to bring demand and stickiness. So this is upside down lambda triangle, which Susan was mentioning this in her how the demand.
Insane open. Insane open. I have locked out majority of my accounts. I'm gonna keep a couple open. Remember, the fuck around and find out accounts. No goals on these accounts. We're just gonna go until we feel like stopping. Our conditions are gone. I am waiting for news this time, actually. 9:45. I will give you guys some trades that you can't take. If you want to be risky, you take this 238 break. This is a risky trade. Safer people, you wait for the 238 base formation. Let's switch up to the indicator. Bias still pointing up. Remember, bias was still pointing up throughout this entire test. Entire test.
So you can see the purple is going to be the full network model. The green is an SOE.
If you took that 238, you got paid. I should have taken that. Would have been 6 out of 6. But it is what it is.
If you use our framework instead, the purple, not only that you are going to have a very large drop in the US because of the tariffs, and you're also going to have persistent. Now, I'm not saying anything in terms of numbers here because this is just a model comparison with numbers, right? This is not a serious quantity work here because I didn't put any tariff. What happens if I put the
Oh, I forgot to check if Alpha Futures folks can trade news or not. You cannot. So 9:45 or 8:45 because it's on Central, but 9:45 news that's about to come up. 2 minutes prior and 2 minutes after, you cannot trade. So Alpha Futures folks, unless you have a advanced account, you cannot be trading.
I'm also going to show you an impact of that, like just based on announcement, which is what we call tariff. This is what happened when we implemented from China to US and purple arrows, that means I put
Okay.
tariffs on that.
A couple seconds here. Just need to make some adjustments real quick on some things. But pretty good at open. 5 minutes worth of work. 5 minutes.
Advanced manufacturing that is also in the United States is going to be affected. This is a trade policy uncertainty. This is the Caldara Index and the Nicolau Index. All policy uncertainty, and the trade policy peaked in around the Liberation Day event, and then come down, but still elevated. So we are also going to bring that in. So that's going to be our tariff threat shock. The model is going to be like you say you are going to do a tariff, and then you take it.
Let's see. How many points did we capture?
Let me show you how different those shocks is, which is going to help us understand why inflation didn't go as high as predicted originally. Because there's an inflationary shock as a cost shock coming from the supply side, but there's also a deflationary shock that is pressuring the prices coming from these uncertainties. So this is U.S. inflation, U.S. output. The actual tariff is going to increase inflation.
240 points caught.
In terms of output, they are both going to decrease output, and in fact, the trend is going to decrease even more. This goes back to what Susan is saying. Well, consumers now are going to postpone their demand. Investors are going to say, stay and put.
Excuse me.
That type of uncertainty is going to work exactly how the uncertainty shocks work in our models. Of course, here
Let's go. You have PMI.
Look at the exchange rate and the trade deficit.
PMI coming up. Bias has flipped neutral. Bias has flipped neutral. Definitely waiting for the news now.
Why? Because of the phone call, right? Because you're going to think that, oh my God, they are coming tomorrow. Let me just buy everything.
Alright, so we are seeing that there's a level that we need to start basing above for the bias to stay. I'm going to utilize 205. And then we're going to watch 238. But, again, if this happens prior to the news or during the news, I'm not taking it. I'm just going to wait.
Now, my final slide, not happen again, counterfactual, but I'm just trying to make the point that actually U.S. is not immune or isolated from these type of global risks. When these global risks is really at the sector country level and also can travel through this.
Yeah, you should be able to. You should be able to copy trade them.
This is a counterfactual shock, large tariff, over 50% tariff on your key trading partners, not even everyone. And there is no retaliation. Again, with retaliation, you are going to get much worse. There's no retaliation. Your key trading partners over 50%. And very key here, there is no monetary.
Very key.
In the previous figure, you see that inflation goes up and down with actual tariff because there is a Taylor rule immediately adjust to that inflation response. So that's why inflation is not going good. Here, monetary policy does nothing, and this is how you get inflation persistence. Of course, look at the number now. I was showing you 0.6 inflation. This is 6% inflation.
I'm not gonna lie. Topstep is really bad with sales. Really bad with sales. They rarely will do a sale. Last Black Friday, they did not do a sale.
Europe, China, and all that. And of course, you do see trade divergence. You see that trade is now diverging in Europe, so output in Europe increases, employment in Europe increases. Of course, it drops in US, and also a lot of large consumption drop.
So I don't expect them to do a sale this year either.
So we are developing
Again,
a new
they just
framework
didn't do a sale.
with multi-layer networks, meaning we have the full-fledged trade network, full-fledged production network, domestic and international, and also capital. Last exercise I showed you are with incomplete markets, matching the net capital flows.
It is possible because, again, Topstep is the only firm that allows you to have no consistency, which is an underrated rule in my opinion. Which is why I love Topstep. However, they could have a lot of other features that would be nice to have.
Tariffs is going to be a very eye-opening exercise if you use actually what happened, and of course with exemptions and with things removed, the tariffs right now we have, even in November, are actually much smaller than what is announced in April.
Alpha futures, folks, you cannot enter trade.
drop in output in longer. But in a counterfactual scenario, inflation can be as high as 6% with persistent up to 12 quarters if you have tariffs over 50% of key trading partners, which was basically what was announced. The policy implication is very clear. The final impact of all these shocks, especially shocks like tariff, is going to depend on monetary policy. But broadly, preserving your financial system open to trade.
All right, let's see what happens.
Best self-insurance for the United States in the face of global crisis. Thank you very much.
Thank you, Shabnam. And now we have Aaron Flan to discuss.
I will be conservative now. I mean, the volatility has disappeared to a certain extent.
It's really great to be here.
Volume
This great work. And in case of
starting to
everyone,
dissipate
this is an
pretty
evening
heavily,
focus
but I
by
mean, we
the
expected a
work
volatile open. We went over
several
this, right?
papers,
I was
hundreds of
expecting
pages,
a
all with
majority
many
big move up, big move
applications,
down, staying in the same spot type of movement. That's
So I think we'd be
exactly what
forgiven
happened.
for wondering
Now we are
whether maybe
respecting
the
levels
versus the exact same
pretty
last
well,
game,
for the
because
most
everyone
part.
seems to be everywhere all at once. And certainly
Bias is
in the Federal
trying
Reserve
hard to
system,
stay
we
up.
are greedily consuming the output that
You got about
she
3
has.
seconds till
It's
this news
always
comes
one of
out.
these very policy relevant,
Should get some volatility back in.
and the topic certainly is a central one. Global
If you want to
supply
be
chain
risky, you can
really
put orders in
plays
at
a leading role
238 for
in many of the
longs
stuff
or
that went on
217 for
over the
longs
last
if you
decade.
want to be risky.
From the tariffs in the first Trump administration, COVID, the post-COVID supply chain snarls, and then of course right now in 2025 with the second round of tariffs as well. And I think for those that are kind of looking into these models, you quickly realize that the details really matter.
If the bias is trying to flip or not, yes it is.
Multi-country,
Definitely want to
multi-industry,
wait.
and then particularly
Let
those
this news
multi-country
solidify
industry
itself.
output tables that are factored in are really crucial. But what I think that this framework uniquely brings in
I'm gonna
are
put
those
long orders in
macro
at
supply
217.
shocks, allowing I think the very real world feature.
And
you're
if we
often-
break
often
below
operating off the first best equivalent
153, I
interior
will
profitability this frontier.
cancel.
And
Clean
that's what's
break.
so unique and so uniquely useful
Alright, you know what? Just cancel.
in what Sebnem's framework has to offer. And so, you know,
We
my
reclaim
appreciation would be
153.
quite
I'll
modest. I, of
potentially
course,
look to put those
offer
back in. We'll
three
see.
thoughts on
Alright, sellers did
ways to
stop in
interpret,
relatively heavy.
what she's already doing, potentially extend a few things so that they would again provide some additional utility.
Bias trying to flip
to
down.
policymakers,
See if it can maintain. Again, I mentioned 153 is going to be the flip level. We're going to start looking for downside. Now, I want to see base formation starting to happen here if we're being conservative. And then look for a potential break. And we'll see a level forms or not. And don't forget, the A plus downside setup is right here. 68.
If these global export restrictions were severe, affecting global industry. And I think, you know, if you follow the history of the literature on a topic like this going back several decades, you would actually go back to this theorem from Halton that would say that, well, you know, the impact's going to be simply just the aggregate sales share of industry and shock. So that's that Domar weight that Sebnem was talking about. If that's true, well, the global
All right.
market for
Want to see 153 retested, hold below, and then we'll watch for
now, if you fast forward
shorts.
to some of the work that was highlighted in Baha'i and Farhi,
Here's
you
our
know, it's actually
153
more
retest.
complicated than that in a
See if it
production
holds
network
below or not.
that you actually need to take
If it
that
doesn't, I'm going to look to
Domar
put
weight
orders
of
in
Chinese
for
rare earths and
longs
interact
potentially
it
at
with
217.
industries that it connects to
Potentially.
in the production network, but then crucially,
I'm expecting a base to
scale
start forming
by
below
those
153. If you got big balls, you short it here.
Okay, and that's in the unique ways in which it interacts
153
with
gave
others
you
in the
15,
production
20.
network. And here I think is where what's really being captured here is the essence
You know what?
of risks.
I'm going to try
in
Lotto
this
shorts,
production network.
153.
We have a world in which that Domar weight for Chinese rare earths is very
Got filled
close to
152.
zero. But because that these Chinese
Lotto sizing.
sourced rare earths are unique in their chemistry
Might
and
get
are
stopped out of this
universal in
one.
their applications, we have a lot of instances in which
Thank you,
those
stopped out. Lotto no go.
substitution for many connections are going to be very close to zero. So you have a numerator
I will wait.
close to zero,
Bias is starting to flip too much. We want to see bias hold in either direction. See if we get that 205 base starting to form or not. Or we get stuck in the chop
to the
zone.
complete shutdown of the U.S. industrial
Chop zone
sector.
right here. 205 to
And
153.
that's an
50
uncomfortable
points.
position to be in.
About.
And so some of the
Give or
questions I
take.
have for Sebnem is, how can we use
Run index on
our
Study Secrets
framework
with.
to
Oh
help
my
us
god.
think about and perhaps illustrate the risks associated with this kind of situation? We know the Domar weight's very small for rare earths, and we know that those elasticities of substitution are also low, but we don't know exactly how low they
205 trying
In this
hard. Let's
case,
see if we can
you know,
find a
having
level
point
to look for longs off
1,
of.
0.01,
I wanted to enter longs at
really is gonna
217.
matter for scaling up or down.
Okay,
these
NQ
rare earth
immediate
accounts.
break
So it might
of
just be a way
228 will long.
illustrating the risk about how our uncertainty in those parameters might impact what
We
care
break
about.
below 170. I will
question is,
cancel.
Look, Sebnem is using the state-of-the-art, the best available data for global multi-country input-output tables, these ICIO tables from the OECD. But even the best available data, their data is at the 3-digit NAICS category. So you're thinking like 332 NAICS fabricated metals. Whereas Chinese rare earths are in the North American Product Classification System, the NAPS. And there it's a 10, 11-digit product category. Where even there, all Chinese rare earth metals are in that single category. You've got
Canceling
lithium,
orders.
dysprosium, all in that one category. And so there we're trying to think about how would aggregation bias work, where you have 3-digit industries, but actually it's really only one sliver of output and uses in that 3-digit industry that could be the central category. And so how should we think about the elasticity of substitution when they are an aggregation of these smaller pieces? So I do want to offer some useful
Putting orders back
here.
in,
One
228.
thing that I found really promising is that buried in an appendix in some USGS material are these really useful
Orders aren't at 228 flat. Same thing. We break below 170. I will cancel.
Applications of rare earths affecting 35 or so detailed 6-digit BEA industries. And not only that, but they actually identify what fraction of the output of that industry uses these Chinese sourced rare earths and in what fashion. And so, you know, you can imagine that this is a way of actually splitting out the input-output tables to take that one sector and then be able to feed it through into all of these industries in a better way. And I know that some other folks are probably using this. I know Laura Aflaro has this paper looking at innovation with Chinese rare earths, so they may be already familiar with this, but I think this could be potentially very useful for this particular topic. Okay, second, I want to talk a little bit about direction flows and data. You know, we often talk
We
about
are
the
getting
production
very
network.
tight. We do have that news coming out at 10 as
This network
well.
also has a flow from upstream to downstream.
Pretty much still stuck in that chop
It
zone.
matters when these shocks affect either an upstream category or a downstream category. And so Sebnem's framework can really think about this and how it matters for how the shocks then propagate through. And I also think it matters for the transmission flow, but also for then the timing. You know, how would a shock matter in the timing of when it would eventually flow through to something that we measure like CPI, if it's really upstream versus substantially.
Again,
further
orders
downstream.
are
So
in
she
at
has the
228
framework
flat.
to help us think through this. I'll just give you one example from the 2018 tariffs on steel. You can see here tariffs were recommended, tariffs were applied. And even if you just look at the steel PPI during this time period, you see a very clear jump in the PPI following tariffs being implemented, much like you would expect. But then what you also see is downstream
Extreme
impacts of those,
volatility.
prices as the price of fabricated metals moves up, and then further downstream the price of machinery moves up. And so thinking about the relative timing,
See if we
the
get filled on
relative magnitudes
longs.
of those, you know, we can kind of do this same theoretical exercise with her model.
Longs entered.
In the data, and I think that could be really useful for us as well.
Same thing, lotto sizing.
So finally, let me talk about capacity and constraints. So capacity constraints are one of those really difficult things to capture in models.
NQ up 10, take if you wish.
So rapid demand shifts during COVID resulted in firms rapidly hitting short-run capacity constraints where they could not and actually did not
NQ up
want
15, stops with the
expand
break
capacity,
even.
knowing that some of these demand shocks were indeed temporary.
NQ stopped out, break
What
even.
results is that those subsequent disruptions then cascade downstream and upstream. Other
Back
firms
to waiting.
do not have sufficient materials to produce the demand that is offered for their particular industry. And so I'm trying to think about how the framework.
You want to be risky,
allows us
217. Well,
supply constraints
it's kind of
might actually be able to
never mind. 217, the previous level that we were looking at for longs. You could try to long it off of that. If you want to be risky, you got big balls. I am at this point just going to wait for news. We got stop to break even. It is what it is.
But I think, I'd like to better understand how her model really could capture some of these things. So once again, I
And
want
first
to provide a
terms
little
would have
bit
hit, but
of help, some data
name of the
on
game.
this topic as well. I think I want to
217 folks, you did get paid.
Resource on this topic, and that comes from the quarterly survey of plant capacity. It's a survey that's jointly funded by the Federal Reserve.
All right, we are trying to get some volume. I'm gonna risk it. I'm trying longs right here, 41.
Production capability, and then what are you currently operating at right now, so you can get at their utilization. So for some plants, you can see they're currently operating at their full production capacity.
And Q first trims it, stops 2 points in profit. And Q second trims it out half.
In normal times, 80% of the plants say, I have insufficient demand, insufficient orders. But what you can also ask these plants is, they can respond
And Q 91 trims it, out
insufficient supply of
75%.
labor, I have insufficient materials.
Or sorry,
And
90%.
these latter two were, of course, very prominent during the COVID and post-COVID supply chain period.
Holding one runner, 50 points.
Firms citing
Bang!
insufficient labor were like 10% in normal
I
times.
don't have a
They
full
jumped to
exit
50% of firms citing this
in
during the COVID period. And then I think even more notably, there were like 5% of firms would ever cite having insufficient materials to produce needed demand.
I'm just gonna hold my profit stops 20, and then I'm just going to manually exit this.
I would like to produce more, but I can't because I don't have enough materials to do so. So this is really useful, variation that could be exploited and mapped into a modeling framework.
Alright,
So let me
finger
just
on
give
the
you one
sell
other
for
example
manual
of how this
exit.
plays out. What I'm
If we do
plotting here
pop
are
up,
steel lead times.
get a nice
This is like
pop up.
If I put an order into a steel plant, what's the lead time for which I would get that? You can see this spikes, and this goes from in the 4 to 5 week range to over 10 during this post-COVID supply chain. And what's happening here is that right at COVID, steel plants thought we're in a major recession. There's going to be a decline in durable good orders, so we're going to shut down production. So a lot of these blast furnaces shut down. Well, very quickly they learned that actually we're going to get a surge in demand for durable goods during COVID, and so they very quickly tried to restart these blast furnaces. It takes a long time to restart a blast furnace, in the months, to get them going back and getting consistent heat and production operations again. And so in the response,
And Q, profit
they
stopped
lagged
out last
behind
round.
in terms of their supply of steel to the U.S. market.
Sorry,
So
it
this
wasn't
is a
watching.
historically high lead times for steel. So as you would
Alright,
expect,
news in
steel
4
prices
minutes.
jump. I'm plotting here actually the hot roll
We wait once again.
benchmark series for steel, and it skyrockets during this time, as we would all expect. But the thing that you can see is that when you look then downstream, you see this big jump in downstream firms. Here I'm looking at
We wait
fabricated
once
metals,
again.
highlighting we have insufficient materials. We're not able to produce as much as we would like. So again, it's these cascading production network effects due to limited supply of materials. So those are my main comments. I just want to emphasize that what Sydenham's doing here is policy relevant research at its finest. It's our profession working.
Remember, 205, that level is still in play, right? You want to see a base forming on 205 or that 238. Whichever one it ends up choosing. If it doesn't, you want to start seeing that base below that 153 for downside. Pretty much as expected in terms of volatility being there at open, remaining until this next news comes out. The next news is going to be very.
Of course, no.
God damn, that lady put her mouth in the mic.
No, this is great. Thank you so much.
Waiting for this next news to come out.
Everything Aaron's saying, and we do have a data problem. I mean, this is exactly the limitation, right?
Phenomenal Friday. Phenomenal end to the week, guys. So far, really good.
Not only
Can't complain.
incorporate layers of elasticities.
I hope you free folks were able to enjoy some of that.
Right? I mean, you can do this actually. I mean, given the now the computer power we have, if you have this subpar sector to sector data at the firm level, you can definitely do much better. Same thing for elasticity, right? Elasticity is going to be also very important here, as earthquake, Andres work here. So we use your elasticity, right? So we are limited by both, like by the elasticities you guys estimate and tell us, and by the input-output linkages, OECD or BA tell us, right? If we improve on those two, I mean, the models are there, definitely. In fact, I'm tired of waiting this data catching up. This is what we do at the global.
2 minutes, still news.
We're trying to create and estimate these things at a very granular
Back to
level.
waiting.
We can get at those timings.
Alpha Future folks, you cannot trade this news. This is high
Survey,
impact
and when we
news.
did the first
Notice we're still
paper,
stuck in the
I
same
was
spot, guys. We haven't
presenting at,
moved, right?
January 2021.
But the beauty of this
Governor
is,
talked about these things at WHO,
if you're a
and,
scalper,
saying, like,
as I
we are
mentioned,
showing these
volatility
type of,
is scalper's heaven.
surveys on
Volatility
thousands of
with
different
volume,
people.
oof,
Very
oof.
similar one goes back to actually 1999. So we can actually make a point like, look, they always said insufficient demand. Look now what they are saying, right? Even like early 2021, insufficient labor, insufficient material. So we showed all these things, and then we say, okay, what is the best way to model this? And all these models now, we have many of them. This, inflationary effect of the, high demand in a supply constrained world, which goes back to the conclusion of our 2022 ECB CITRA paper. Many of us model
Oh yeah,
different,
market
right?
is
Like
insane today.
capacity constraint, vertical factor,
But
all
that's
this.
the
And then
beauty of
when we
volatility.
look at those surveys,
If you got
all
big
your
balls,
observations,
long
and
immediate
we
break
like
of
the
223.
best
You know
way
what? We will
to
long
model this is
immediate
going
break of
to be through
223.
sector factor supply, because that is
Alpha
our
Futures
best
folks,
chance
you
to
guys
measure
cannot
this
take this
thing, right?
trade.
That's our best chance. Because the idea is always like, what is the most flexible model I do so I can take it to the data, so I can
NQ
quantify.
longs enter.
The big work here is to do
Lotto
definitely,
sizing.
do more of those elasticities and
Be
more
careful.
sort of
Don't
fundamental.
size heavy
Make
for
it
this
very clear.
one.
The practice right now is estimate these things at a very micro level, very well identified. I can do it for the steel, I can do it for the rebars,
Close to
oil,
stops.
and then stick these
And
things
NQ Lotto
together.
stopped out. No go.
I think we should move.
Oh, I did not see the bias
Hold
flip.
the
Sorry,
policy,
sorry.
hold the policy, and hold the other thing. We have to
We
do
will
that
have to wait.
to get
Bias
back
is
to
1 bar
we
deep.
definitely need to
Did not
handle
see
this
that. I
at
thought it
a
was still
granular
4.
level and,
My apologies.
less aggregation than just like a 4-digit sector. But the model we wrote down is
Should not have taken
flexible.
that
We
one.
can definitely do that. It's just a way to.
Thank you. Let's take some questions.
Bias is right here on the chart.
Could
The one I'm
you
streaming,
raise
right?
your,
Bias flip neutral. Bias is trying to flip down. 153 was our level. They'll start seeing base below.
first, and please wait for the microphone. So
You never want to be trading unless you're super risky when the bias is fresh.
Economics. I share the enthusiasm of
I like to see at least 2 bars on a bias. You can take it on the bias flips, but it's just very risky to do so. It's up to you. This also was the daily close area from yesterday, so important area here. Excuse me. 153s become your intraday pivot point level. You want to see base below for down, base above for back up. If you do a risky and you took the 1 minute sell signal, you are getting printed, or you are printing, or getting printed. I'm dead as fuck. I don't know why I said that.
One-timer permanent. I think that's a question Federal Reserve board members have been asking. Conclusion, one time.
We are looking very heavy.
Using your apparatus.
do I answer or you think I'll collect?
Okay.
Tommaso,
Okay, so this was very interesting work as usual.
I didn't see that 1 minute signal come in, so that's why I didn't take this.
So
And as I mentioned,
so first
fresh
of all,
bias flip
just
is
to
risky,
understand, so
right?
You are talking about risk. And you're talking about first
Only time to
launch
take like very risky trades is if you have a
events
cushion
don't go
built.
linearly through production and function, right? So, but I guess you can also think of second launch shocks.
We're starting to overextend a little bit.
So uncertainty shocks in different parts of the
I want to see 153 retested,
global
and then I'll look for shorts unless I get a signal.
The second is that point that
Remember the A plus setup. For downside, I mentioned is right here, 68. Usually A plus setup does not immediately go. It takes a little bit of time.
Even more of an argument to think that, let's say, trade protectionism risk is highly correlated to geopolitical risk. Actually, one could even think that we could go, if we take seriously, as we should.
Alright, let's watch for a retest up top, and then we'll potentially look for a short if we can get a little bit more confirmation.
For thought and analysis.
Because again, now that we've made enough profit on the day, we've hit all our goals, etc., no need to be as aggressive. Any trades that I'm going to be taking, sized down lottos. Remember, risk only like 5% of your profits per these lotto trades. Don't go heavy or skip them.
So if these shocks are global in nature,
We've captured over like 270 points or something.
they propagate differently depending on possible different degrees of financial market integration. So I'd like to know.
Let's see if we get that retest of the 150. That's what I'm looking for. Want to see us basing below there.
Global shocks and not only global shocks, but also granular shocks that may derive from some particular sectors or some particular.
No base. In no trade land.
For the first question, this is absolutely very important. This whole, is it a one-time price jump, and is it going to be a persistent inflation?
No trade zone here.
This depends monetary policy, what the monetary policy is. That's why.
If I want to see that upside, 153, your pivot point. Base. Aim for 205 if you're taking that. Second, if you want to be safer, 205 base. Aim for 238. Safest. Wait for 238 base. Everything in between, chop.
But if the monetary policy not responds or not responds in the way that is put in the model in a Taylor rule, then you can have inflation persistence. And that can be not just like one quarter we showed in the extreme case.
Nothing is solidified here, hence the no trade zone. You wanna wait for some stuff. 205 folks. This is your spot.
Let me make this very clear. This whole, one-time price and it goes away, transitory thing is a very much a standard, complete market.
NQ immediate break of 229. I will long.
This full network structure into a dynamic Bayesian model, which is what you guys use to do monetary policy.
You 205 folks got paid. Or almost got paid. It hit 119. 19 to like 18.
Don't talk about optimal policy, but it's absolutely going to determine that final result, that one-time price. It's very important. Thank you. We are hoping journals will appreciate that too, but I'm very happy that you appreciate this. All right. Okay. Tommaso, yes, the first moment and the second moment. And this is exactly, I went back to Susan's speech. We want to capture both. And that's why I showed you the policy uncertainty figures for trade and economic growth. The first two applications, the pandemic and the
super volatile, super choppy.
The model sold now linearly, but I showed you just to give you the intuition, the first order approach.
Patience is key here.
You do exactly like you're saying. There's a first moment shock, there's a second moment shock, and the technology we are using is actually now over 20 years of work in the financial side of the literature, where we have these wedges in the arbitrage in the UIP equation, and those are second moment shocks. You can put that as a level shocks into the UIP equation as an exogenous intermediation bit, or you can fully endogenize that as a volatility shock. And I have a paper with Özge Akıncı and Albert Karato, showing exactly how to do that. Now, we in that final exercise I showed you, that's how it enter. That's why actually not only you get depreciation, you can actually even match the depreciation,
Starting to get some heavy volume to the downside. NQ meter break of 118. Will short.
The second question you have the geopolitical. Yes,
Lotto
this is
sizing.
my, second
NQ
exercise now on the geopolitical front.
stopped out. No go on the lotto. I will re-enter.
Geopolitics is like, again, goes back to 1940s.
Same
That's
level.
why I put Hirschman and Taylor, right?
Minus 20. Put that for the
We
record. That
want to
moved very
focus
quick.
on just freedom.
5% per trade. 5%.
The new literature on geoeconomics is more focusing on the personal side. So, like, asymmetries and dependencies, and if you're a large country who can manipulate terms of trade, you can use this geopolitical leverage.
I'm gonna look for re-shorts with the size up at 120. NQ immediate break of 120. Will short. Break above 185 will cancel.
Which is great. I mean, so I'm a big fan of, like, putting the things that really, we know since 1940.
Orders are in at 120 flat.
Equation set up so we can see, okay, how you can do this, how like a hegemon can do this. Which is great. What we are trying to say is like, US can do this, China can do this. That's the whole railroad saga. This is why we spend all those times to think about that, right? Any country can do it. Remember my first figure. This is our point. Like, maybe it's time to think about it now, bipolar world. Maybe we have to hegemon. I don't know, right? I mean, we are not trying to model that process, or we are not trying to say, are we going to
NQ shorts entered. Size up. Risking about 15% of profits in this one. NQ up 15. Stops move to break even. NQ stopped out break even. Re-entering. Not sized up. 1 second. I have not re-entered. Hold up. Hold up. Re-entering here. 129. Lotto sizing. NQ up 15. Stops move to break even. First trims hit. Stops move to 2 points in profit. She's moving quick.
But also in the sense that, like, okay, as long as correlations are not perfectly correlated, which would be an alien invasion of the world.
99 trims hit. Out half. NQ profit stopped out the rest. Re-entering. 114. Very small sizing. NQ Lotto no go stopped out.
We are going to build all sorts of AI, electricity centers, which we are already building. The investment growth in the United States right now.
NQ immediate break 115. Will short. NQ shorts entered. 5%. She said fill the order. That's funny. We look ready to fall off a cliff, in my opinion. NQ up 15. If you want to be risky, you can size up here. Sizing up 195 or sorry 95.
Paul Antras, Harvard. It's a great presentation. It's a bit of a specific question, but
95 trims filled. 85 trims filled. And Q profit stopped out the rest.
It's a little bit hard for me to understand.
Re-entering shorts. One more time. 104.
Chinese retaliation.
Lotto sizing.
No, this is a very, very good question. In fact, when we
And
presented
Q
the
hit
HG,
15. Stops up to break even. And Q stopped out break even. Went to re-enter one last time. 103. It's very hard for me to type all this out very quickly and do this at the same time.
Having said that, two things changed that classic. One is, of course, general economics.
And Q up 10. Take if you wish. And Q up 15. Stops up to break in. And Q stopped out break even.
But more importantly, stickiness,
All right.
interaction, you can interacting.
As much as I want to re-enter this again, I still believe we are about to fall off a cliff. I will hesitate. Actually, we just got an order in. Or alert in. Thank you, short. 108.
Multi-country stickiness gets you have a sector stickiness, right? So services more sticky than manufacturing, energy, and that is proving here not just for the West, but also
Still Lotto sizing. Still 5%. Close the stops. And Q stopped out. Lotto Dogo. Bias flip to neutral. I will switch to being conservative and waiting. There is that A plus downside setup, right? Around that 20. It is starting to move up. 24.0, whatever that is. 7. Alright, NQ immediate break. 24.100 will short. Keeping a lot of sizing. Thank you. Shorts entered. Lotto sizing still. And Q up 10. Take if you wish.
Overall, though, with the existing tariffs, this is very important. We have a stagflation impulse on everything. Right? That's, I think, also.
Miriam,
Close to
Ishin from-
stops. And
so,
stopped out.
First of all, I'm very happy to see a macro model not
Go.
conclusion that trade just doesn't matter.
Re-entering 100 again. You can increase the size if you want. Thank you for Shrim's hit. Thank you, Trims at 24.070 hit. 60 Trims hit. 40 points. Out half. The rest of the trims will be smaller. The volatility is great today. Is great. I did size up as I mentioned. 50 trims hit. 50 points. I'm going to try to get 100 out of this. A plus setup spot. A plus setup spot has been tapped into now. Great choice to size up on that one. I tried it earlier, but we got stopped out break even on that one.
Yeah, no, you're exactly right.
Putting profit stops in at 15 for the rest, in at 85.
We can definitely generate higher US consumption, higher output, right? And it's very easy to generate that result. And also, this is a combination of a short run new Keynesian macro
And profit stopped out the
long
rest.
run standard trade. So we are going to match all the standard trade inside in flex price dominant. So that's what I'm saying. But in the short run,
I
we are
will
also
watch
doing
for
output
re-entry
trade.
on shorts
And how
one more
this works,
time.
it's going to be very difficult for central banks, you know.
But I want to see this retest that 24.100 level. and then we will potentially watch for that.
We tested the model on 2018 tariffs, which wasn't like that. This is unique to this year where you do multi-sector, multi-country.
We're gonna see this bias starting to hold more than anything.
Level of tariff, not any
Excuse me. Probably gonna look for one more trade and we're gonna call it a day there. Very good day. Very good day. I hope you guys that joined the free stream have an idea of what it's like. Usually it is not this volatile and aggressive. I'm not gonna lie to you. It is not like this usually. It just happens so that we have an extremely volatile day with a lot of movement, right? And as scalpers, I mean, you gotta kind of take advantage of that because that's pretty much what we need in terms of our conditions. These are our conditions. Day traders, it's a little bit harder. Day traders probably only got like one trade today, maybe. Which would be that downside move that we captured for the most part. Yeah, that is one issue that can happen with extreme volatility is that it is moving very, very, very quick. There is that, and this is where those ATM strats really come into play. The immediate break ones, those relatively should be able to be captured, but the ones where I'm saying I'm entering now, that I completely understand. Don't know if I want to reshort. We might trigger the A+ setup here. NQ immediate break of 57 will short. We break above 24.1110 will cancel. Yeah, today was like, again, it's usually not like this. I don't remember the last time it has been like this except for yesterday. But that's because I chose to make it like that yesterday. This is a little different. Orders in 57 flat. NQ short entered. Lotto sizing.
This is super important because we look at
5%.
that. First of all, because we have imbalance trade in continent markets model, the one that I used for the tariffs, we actually match the US net.
Again, this is where the A+ spot is triggering. You need heavy volume with follow through to actually break through this, which we have from what it seems. NQ up 15, stops move to break even. Alright, so everybody should have been able to catch that one. It was an immediate break order. First term's hit. Stops 2 points above for the rest. This is lotto sizing, so I can't ride this one as much. 27 trims hit, out half. And I got profit stop out the rest. All right. I want to continue shorting this. I'm not gonna lie. I am trying to wait for a 15-minute, 5-minute, or 3-minute signal. Because again, that A+ setup spot did get tapped into. I mean, it did give us a little bit, not like too much. But given that we have the conditions showing choppy and structure showing volatile, we want to still be relatively careful. Yeah, not only does it get easier after a few times, it's usually not like this. Like, for the folks that are here on a daily basis, they pretty much know that it's not usually like this. But the immediate break orders, that should be very easy to follow because you do have time before that hits, right? I give you the level and then we take the immediate break. Like that one right there that we did just take, you had like 40-ish seconds to put that in. I think volume is starting to die off a little bit. Let's see if we can confirm that. It's still there, but it is starting to die off a little bit. And if we get back above 153 and get back into the chop zone, we might have to call it a day here. But a lot of trades today. A lot of trades. So hopefully you guys were able to catch at least like, you know, one or two. I really want to reshort this, but I'm being very hesitant here. Okay. NQ immediate break 24.080. We'll short. We'll short. Break above 140. We'll cancel. You know what? Cancel. NQ immediate break 24.087. We'll short. Break of 24.087. We'll short. Break above 1. I'm trying to give this room because of the conditions. Break above 178. We'll cancel. We got to see if the bias will flip back neutral. When we're back, or sorry, back down. As I mentioned, if we get back into this chop zone, which we have now, we might just have to wait it out. Heavy volume. But back into the chop zone. This is a no trade zone. No safe trades from the indicator today. Only aggressive trades from the indicator. The 1 minute and the 3 minute from what it seems like. Okay, NQ immediate break. I'm watching 24.116, but I need to make sure that the bias flips, so I'm not going to put that there. NQ immediate break 24.102. 24.102. We'll short. NQ shorts entered. A lot of sizing.
Maybe during the break. That's coming up next. So that concludes our first session today, and we're going to break and reconvening at 11 o'clock. Thank you.
This is risky. NQ Lotto stopped out, no go. I'm going to watch for re-entry. Same level, 102. We'll re-enter. Actually, wait, no, cancel. 94, 24.094. NQ immediate break, 24.094. We'll short. Same thing. Want to target the bottom of the chop zone, and if that doesn't work, I'm going to call it a day here. If you want to be risky, you can use 102 again. Alright, well, those guys are done talking. NQ shorts entered. You have 10, take a wish. NQ up 15. Stops move to break even. 102, folks. You got paid if you use the same level again. NQ first trims it. Stop 2 points in, profit for the rest. NQ trim at 64 hit. Out half. 30 points. Everybody should have been able to catch that one as well. We had the immediate break levels in. NQ 54 trims it. Out 75%, 40 points. Last trade. This is the last trade. I'm calling it a day out once we're out of this one. Profit stops, 10 for the rest. 44, I will be out 90%. $44 trims hit. Holding one runner. 50 points. Bang, bang, bang. I don't have an exit in. I will manually exit. Had a feeling we were setting up for a cliff fall. And this is just the beginning. This does have a lot more room down, but I'm going to call it a day here. We've traded a lot. We've captured a lot of points. No need to get greedy. Everyone should be green. There were enough immediate break plays that everyone should have been able to capture at least some points. Again, no exit in for me. NQ up 60 points, take if you wish. NQ up 70 points, take if you wish. I am going to put my full exit in at 994 for 100 points. Profit stops 20 points now for the last runner. Oh, I don't even see you did have a. I didn't see if that hit. I'm pretty sure that 15-minute sell signal that just came in did hit because I didn't see one of the lines for the TPs. So that did hit. I did not see that pop up. Sorry. The stream is on. I mean, you guys should be able to see those things pop up before I do. So in this last runner, I got very close to profit stops. Holy crap! I got saved by 2 ticks. Gotta love it. Remember the 8+ setup. I told you guys 78 area. Pretty much ran through that. If you just played the 8+ setup spot multiple times, bang, you print it. Again, full exit is in at 100 points for me. See if we can get it. A+ setup did activate. I want to see it hold below that 78 level for continuation, and then targeting our macro dip buy levels that I mentioned this morning. This area here, and then this area here is what I would look for if you are a 78 entry day trading, looking for a large move sort of situation. Those would be my ideal targets. But good stream today, guys. Captured a lot of points. Even prior to stream, captured a 70 pointer. 60 something pointer. Very good finish to the week. I believe we caught over 380 points today, something like that. We did give back about like 60 or 80. Either 60 or 80 we gave back, and then we captured above 380. Recap will obviously be posted towards the end of the week or on Sunday. Oh, I didn't see I got profit stopped out the runner. Alrighty, folks. I'm going to call it a day here. Phenomenal day on the stream. I hope you guys were able to make some money for the folks that are new and have not had a chance to join the streams before. Again, it's not generally like this in terms of the aggressiveness / fast movement. It usually is much slower. It just happened so that the market had a lot of news, as I mentioned this morning going into open, that we will have a lot of volatility today. So expect that, right? So this is where ATM strats and getting familiar with the platform that you utilize comes into play. All right. I'm going to leave you guys with that. Remember, the A+ setup did trigger. And again, I would target these areas here. I do expect more downside. I'm just done for the day, though. But there it goes. All right, folks. Take care. I hope you guys have a great rest of your day. Peace. Peace, peace, peace. See you guys next week.